All right, so let's begin the show by talking about AI. Artificial intelligence has been transforming various industries, and the financial services sector is no exception. With the rise of robo-advisors and other AI-powered financial tools, many are wondering if human financial advisors will soon become obsolete. Let's explore the pros and cons of AI-driven financial advices and assess whether AI is likely to replace your financial advisor anytime soon. So let's welcome on board Krithika Muthukrishnan, Chief Data Science Officer. Krithika, good evening and welcome to the show. So we've been seeing AI doing a lot of things, whether it's about doing kids' homework or helping people or professionals with important data crunching and number crunching. But then what's really important to consider over here is that will AI be your future financial advisor? So far, what is the kind of financial planning or the understanding of financial instruments AI is been offering people? What have you tested and what have you seen?
Good evening. Uh, so AI and particularly generative AI, ChatGPT and things like that have really, I think, taken the world by storm. It's been in the discussion a lot in the last few months. But one place where AI has been used quite often in financial services is investment selection. For example, we at Scriptbox have always believed in a algorithmic evidence-based approach to investing. And so what does that mean? There are about 40 asset management companies and more than 1,300 individual funds to choose from. And the sheer volume of options can be quite overwhelming for investors. Right? Not only that, when selecting a particular type or a specific fund, you need to consider different factors. Like what is the investment objective, what is the risk profile, what is the investment horizon, and so many more other things, right? And each element plays a crucial role in determining what's the right investment strategy for a particular investor. So what we do is by using a non-bias that is based on data and evidence, we help investors select the best funds for their needs. And your AI engine not only helps you shortlist the parameters that are most important, but assigns a weightage and then helps you understand which funds are the best, are your recommended funds, right? Making the entire process quite rule-based and objective. Now, while organizations like ours have been using this for some time, I think the emergence of AI is great from an investor perspective. What's going to happen is the industry is going to use more such algorithms and AI for fund analysis, and investors are going to get better and more objective advice. So this entire emergence of AI is great for the investor.
One little difference I want you to highlight, which is a difference between robo-advisory and AI suggesting you financial instrument and doing your financial planning. Both the same thing, or there's difference?
There is difference. So, like I talked about, robo-advisory really focuses on helping you select the right investment products and funds. So, objectivity is a big benefit of robo-advisory. AI lets you take
robo-advisory also, but in robo-advisory also, Krithika, can we say that it is AI driven?
It is, I would say, it can be AI driven.
Okay.
But more importantly, it's algorithmic driven.
Achha.
And it will typically be tech driven. Right? More you can use AI, and more advanced organizations are starting to use AI there.
Okay.
Right? Whereas what AI allows you to do is to actually do more than robo-advisory. It allows you to take it forward to personalization.
Okay.
So let me just try and explain this a bit, right? So you have to understand each individual investor is different, right? So they're in different stages of life. So an investor in Indore who's 48 years old and say is going to put two kids into college in the next 5 years has a completely different set of goals, ability, and willingness to take risk from someone, say, who's sitting in Bangalore who's just 35 yet to have kids, right? So not only that, their emotional needs can also be quite different, right? So how do they react to market turmoil or changes in the market? So I think the next big thing for AI, which is emerging, is personalization, right? So personalize the experience for each investor. And basically, this is what we call hyper personalization, or recognizing the individual needs of each customer and delivering to a segment of one. So each person will get an individualized investment strategy, what products are right from them, and when and what kind of help do they need. Now, going back to your question in terms of how this will be delivered, now this may be delivered through an advisor who has these AI recommendations to help him deliver better advice to the customer, because there is that human touch that is needed. And a combination of these becomes really powerful.
Exactly.
Over
So
a
I
period,
was just coming back to that point because the human touch is important, and people in India, it's your hard-earned money that you're putting into. And for that, if you do it through an AI, it might sound very complicated and also a trust factor that really matters a lot when you go for these kind of investments. But also, just adding to what you also mentioned earlier, now an AI will obviously configure everything and give you the best available options, analyzing and assessing your risk appetite, your long-term goals, and the kind of investment instruments you're comfortable with. But then, how do we know, or how can we ensure? For example, if we talk about stocks, if someone wants a recommendation in large cap stock category, how do we know that what's been suggested is actually accurate?
so you have to trust the process, right? So that's the first and foremost thing. And over a period of time, your entire AI technology gets better and better in terms of recognizing what are the parameters. So even in terms of when an individual advisor looks at it, he's following some kind of process to select a particular fund. AI just scales up that process and makes that process much more rigorous and much more fact and evidence based. So that's the benefit that AI brings. So, for example, there may be, I don't know, 100,000 research reports out there. It's literally impossible for one individual advisor or even a bunch of advisors to look at all of that and distill that out into what's meaningful for the investor. What AI can do is really help, analyze that information, tell you how do you rate it, and provide you recommendations along with why it's saying that, so an advisor can use that to better recommend things to his investor.
In a country where we are talking about financial literacy being the most important aspect of financial planning and helping people participate in the equity markets and basically the understanding towards financial planning and investment portfolio, do you think having an AI suggesting you all these things will help in the financial inclusion or financial literacy that we are aiming as a nation?
See, I think we need to take into mind that technology is changing very fast, right? So I think if you look back 15 years, the idea of people buying funds and stocks online without an advisor would have been very difficult to understand. But as the technology becomes better and better and more suitable for an individual use, for a customer use, I think you will start using it more and more. But that's not to say that the human advisor does not play a role. The human advisor plays a very important role in helping the investor with the emotional management, what we call emotional management, right? So helping him understand why we are saying what, making sure that investors don't panic, say when suddenly the market is low, just making sure that they have a place and a person to go to ask questions and get them answered. So it's a combination of human plus AI, human touch plus AI, that would be
I
really
wanted to
powerful going
understand
forward.
because this will clearly not nullify the role of a financial advisor, which people are thinking and really bragging about these days that, we are getting a financial planning done over an AI. So, as you rightly pointed out and highlighted also, behavioral finance and the kind of emotions an investor is attached with, when it comes to their investment strategy or portfolio, I think that is something that cannot be replaced through an AI. But then what's important over here is to understand the kind of help you should be taking from an AI when it comes to your financial planning or your investment instruments, recommendations also. Because right now, what even I tried googling up a few AIs and trying them out. It gives you a very generic basket of investment instruments. If you, for example, just ask them that you want to have your 70% exposure in equity and the rest in debt, so it'll give you all kind of recommendations that's available. But then for you to understand what's right for you, you still might need a human financial advisor's help.
So it depends on what stage of investment you are and what kind of investor you are. So since you mentioned you tried different AI and algorithmic tools, I suggest you give Scripbox a try. But basically, you know, uh, I think it's more important that investors understand the investment process, right? So They need to have a clear goal. They need to understand what their financial objectives are. So, is it about funding a child's education or planning for retirement? And then they need to stay invested, right? So, it becomes really disheartening for us, for example, when we see investors who enter at the peak of the market and exit at the lows, right? So, they try to time the market. So, these are places, for example, where an advisor can play a role. But in terms of the hard numbers, in terms of being actually able to select which funds, an AI can play a pretty important role in throwing up what are the best funds, because that is an algorithmic objective process, right? So I would suggest to every investor that you should work with a trusted partner, someone who can provide the human touch, along with a very non-biased approach to investment selection and reviewing that investment, right? So along with this person, you can plan your financial goals, you can understand, accept you can understand your risk levels, choose your investment strategy, so that human touch plus tech and AI is quite an unbeatable combination, or is going to be an unbeatable combination going forward.
Insurance strategy, is AI helping people avoid becoming the victim of insurance mis-selling also?
I don't really know if that's happening yet. Uh, can you, I don't really think that's yet happening.
Our insurance recommendation and things on policies and suggestions are given on AI when you talk about insurance, health, term, any sort of insurance policy or coverage?
So I think the insurers would be probably a better bet to talk about. But I know that they are trying to do some things on insurance. For example, trying to provide you the right insurance when you're building a goal. So, for example, I'm building a SIP, I'm investing in a SIP for my child's education. So, providing an insurance at that point in time to protect my goal, right? So, you have information on what the investor is trying to do or what the customer is trying to do, and then trying to match that.
Okay, Krithika, any way to figure out that we are taking the help of a right AI or the right algorithm, because there are so many and most of them are maybe in the dry run or trial mode these days because they're not completely and full-fledgedly launched in India. How do we ensure that the algorithm that we are talking to or taking suggestion recommendations from is actually worth it and knows all the aspects?
Sure. So my suggestion is, don't go for an algorithm that you've not heard of before, right? First and foremost, look for trust, right? So look for and don't go just with an algorithm. So go with someone who can help you use the algorithm, right? So if you're an initial investor who's just entering the market, for instance, you can say your needs and goals are a little simpler. You can say, I'm just using an algorithm to select the funds, right? So for example, if you ask ChatGPT, give me portfolio recommendations, it typically gives you a list of factors to consider, but says go and consult your financial advisor or go and consult someone who knows about what they're talking about. So don't just use any algorithm that is there. Don't try and use ChatGPT itself or any generative AI. It's not yet there. But rather go with a trusted advisor or a trusted partner, right? I think that's what I would say.
So far so good. Even if you get your financial portfolio designed by an AI, it's very important for you to get it cross-checked by a human financial advisor, or the least you can do is just send us your financial portfolio details to the Money Show and we will get it consulted through our expert. Thank you so much, Krithika, for being on the show and helping our viewers with this today.
Thank you.
We move on, and we at the Times Network are back with our flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda as we move forward on the path of integrated, equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy but the global one as well. To pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy and corporate world. So get ready to catch all the action here on Times Network. Alright, so on that note, we'll take a quick break, and post that, let's talk about the expense ratio that's going down on ETF. What does that mean for you as an investor? We'll talk to Nirav Karkera after this break.